everyone. Today I want to talk about when to apply for credit. That's a question I get asked a lot. So when people are going through the credit repair process or just starting out, when is a good time to apply for credit and what type of credit should you be applying for? So I always tell people, if you have positive accounts that are currently reporting, let's say you have a Capital One Platinum that's reporting to all three bureaus and it's been positive for the past 5 years. You're probably not going to want to apply for a secured credit card. You're probably just going to want to build on that, like maybe ask for a limit increase and maybe just start using it a little bit more to keep that account open and active. But if you're in a situation where you're getting credit repair and they're basically just having to wipe out all your accounts because they're all negative or just loaded with collections and different things like that, you're going to need to basically start over. So there's a few services I recommend for that. So I'm going to just look at one really quick. The main service I recommend is Credit Card Builder. It's a secured credit card that reports to all three bureaus, and the fees on it are extremely low. It's a $200 deposit, and it's something I recommend to people that can't get approved for a credit card if they were to pull your credit report, because Credit Card Builder will not pull your credit report. They just ask that you are not in a current bankruptcy, because then you could put that card in the bankruptcy, then they're out money. So that's the reasoning behind that. And then that's a good secured credit card that's extremely easy to get. And the cool thing is you can keep that for 1 or 2 years. You can use it, pay it off, have some consistency and credit on that, and you get a good portion of the money back. I think you get about 70 to 80% of what you put into it back, because there are obviously fees associated with everything like that. And then another thing is Self-Lender or Self.Inc. So they changed their name recently. But Self-Lender is basically an installment loan. So it acts almost as like if you were to get an auto loan. That's very similar to what Self-Lender is and puts on your credit report. So there's like a $25 plan, a $50 plan, different things like that. I always tell people get the 2-year plan and just put the cheapest amount, because the amount of money in that loan doesn't matter. It's just the fact that you have a loan positively reporting on your credit report. So at the beginning of the credit repair process, you can actually start all of these things that I'm talking about. You don't need to wait to the end, because they're not pulling your credit. They don't care what your credit score is. So why not build it now rather than later? So I know companies may recommend later, but to me that just doesn't make a lot of sense. I always recommend sooner the better, because 6 months from now your credit's clean, or at least 90% clean, and you have 1 or 2 positive accounts that are going to boost your credit score up to maybe 680, 700. And the basic rules of thumb for your credit score being, let's say it's 720, is you want 100% payment history. And after 24 months, late payments due, their effect does diminish quite a bit. Inquiries, maybe 2 to 3 in the past year. After 6 months, the effect of inquiries, and even how banks look at inquiries, it'll diminish. So I know, like American Express, for instance, if you had 32 inquiries 8 months ago, they're not going to worry about it because it's past the 6-month mark. But other banks may care about that. What banks are looking for when you apply is, are you applying for 20 different credit cards, trying to get a massive amount of credit to just go spend it and blow it all and then get right back into square one needing repair? Or are you looking to be responsible? So having these secured credit card accounts will create some longevity in your credit score. In the event that, let's say, a collection popped up and you need to pay that off or get taken care of, you have these things holding you back. So Credit Card Builder is a card I would recommend keeping until you can get a unsecured, which by unsecured I mean a card that doesn't require a deposit on it. So if you can get a card that doesn't require a deposit on it, like my favorite starter card is Capital One Platinum. When I first got it, I got approved for like $500, and now it's had a $3,000 limit. Currently, my current limits are about $10,000 to $12,000 credit card limits, and I'm at zero debt right now. You only need a secured credit card like Credit Card Builder as long as you don't have any unsecured lines reporting. So if you do have an unsecured credit card, you can just get your money back from Credit Card Builder or whatever secured credit card you choose to use, and just keep that unsecured credit card positive. So you always got to have at least 2 or 3 credit cards in your arsenal that are maybe used once a year, paid off, and just left reporting positive payment history. So thank you for watching. I really appreciate you guys coming and supporting me. I'm here to educate you, so please ask me any questions. I have a repair service. My goal is to help everyone get the credit fixed and even just get some additional education on keeping it right. Like, there's a lot of factors of credit we need to understand to really keep our credit over a 700. So I'm here to teach that. So thank you for watching. I hope you have a great day.